Hey YouTube, today I want to talk to you about super important changes that all foreign-owned multi-member LLCs need to know in 2022 for their 2021 tax filings. So, if you are a foreign-owned multi-member LLC and you are operating outside of the US and you have foreign owners, again, foreign owned, I'm going to beat that to death. That's what we talk about on our channel. There's some really big changes for you on your 2021 tax forms. And I'm going to go into detail about that now. In the past, if you have a multi-member LLC, and still currently, if you have a multi-member LLC, that means you have an LLC and then there's Fred and Tom are the owners, they're partners. Then you file a partnership tax return, a form 1065. I just filmed today a course on this, on how to do all your tax forms and stay compliant and how to fill in everything and how to do it all. And it made me realize that I need to share more information about this topic because there's some really big changes this year that affect your filing. So in the past, you would be able to tell the IRS how much income you had, how much expenses you had, and how it's attributed to the partners. There was no real way for us to show to the IRS that you had no effectively connected income with a U.S. trade or business. And for all my foreign-owned multi-member LLCs who want to be compliant in 2022, this is important to not have to pay taxes and also to match up what's going on with the IRS. So if you're using a W-9 and a multi-member LLC, that's amazing. You give a W-9 to the guys paying you, and they give you your 1099 at the end of the year, and that should be totaled up on your Form 1065. You should have the total sales, and that's going to keep the IRS from auditing you. But if they do audit you and they do have questions, it's important also to complete these new forms, Schedule K2 and K3. And I just went over them on this video that I did on this course, again, how to fill them out completely. But I want to share my screen with you and go over these a little bit in more detail. So once you prepare your tax return, you have the K2 form. This is a new form for this year, and it has the partners distributive share items international. So this is an international filing, and you attach it to your 1065, right? I'm going to skip through all the beginning stuff and go straight to part 10, which is what I think applies. The foreign partners, let me zoom in a little bit for you. The foreign partners' character and source of income and deductions. Of course, you need to put in your partnership name, your EIN here, but this is where you're characterizing the income and the deductions. So this is the total. This is the partner determination, U.S. source, foreign source, U.S. So this is where the partnership determination. This is the important part. Here we have effectively connected income, and I think that's assuming it's assumed to be with a U.S. trade or business. So effectively connected income with a U.S. trade or business means it's earned in the United States, and that means you should be paying taxes on it. And if that's not the case, if you're earning it from your couch in Yugoslavia, then or whatever in India or wherever, doesn't I don't think Yugoslavia is a country anymore. If you're earning it from your couch, it's not U.S. source or foreign source, right? So this is determining where the income is, where it's earned, ECI or non-ECI, and then the sourcing is determined by who pays you. So if I am a foreign person, so let's say I live in my example, I live in Norway and I work from my couch in Norway, and my other partner also works from his couch in Norway. It doesn't matter. If we're getting paid by, a Swedish company, $100,000, that's what we're putting here. The Swedish company pays $100,000. If we get paid by a U.S. company, we put it here. They also pay us $100,000. The total is going to be over here, $200,000. So it's really important to do this form because you're telling the IRS that it's not effectively connected income and it's not subject to tax in the U.S. because it's either foreign source, and even U.S. source isn't subject to U.S. tax. It's just the sourcing. And for most of my clients, I would recommend that we just put it all in foreign source. Just put it all in here. If the IRS checks and you made a small mistake, that's fine. It's the first year that the forms are out and most people aren't even doing them. So foreign source, 200,000, total 200,000, and this is going to really help you because you're going to be telling the IRS that you're not subject to U.S. taxation and that your income is earned abroad. U.S. source FDAP is fixed determinable annual or periodic income, and that is not good because that is usually it's subject to U.S. tax as well. So all three of these would be subject to U.S. tax. These two wouldn't. And it's not like this is calculating a tax, but this is just how you're supposed to file it. And I wanted to make this video just to share that K1 or K2 and K3 are new forms. And this one is the source of your expenses. So we go to the second part, section 2 of part 10. We have the expenses, and we're going to put all the expenses are definitely going to be foreign source. And again, you don't want to have any U.S. source expenses unless maybe you want to call like Facebook or Google Ads, but I'm still going to call that foreign source. I'm going to call it all foreign source. You're all offshore, you're all foreign source. I'm doing it that way. And that's really just going to, again, confirm with the IRS that you have no U.S. source stuff and you shouldn't have to pay taxes in the U.S. It's the way to do it to protect yourself. And that's really the end of part 3. You can put here your total gross income on this line, and that's kind of it. And I would just attach these 3 pages with page 1, and attach it to your partnership return. And then form K3 is this exact same information in very similar filings, but you need one of these for each partner. Again, in the course, I go over all of it, but in part 10, you see it's the exact same setup. Ordinary business income total, partner termination, foreign source, but here you're putting the actual partner. So the other form is the total, and this one's partner by partner. So it should really be the same, except for, obviously, this would be 50,000. Like, this would be 100,000. Because this one is going to be... Where are you? Yeah, so this is 200,000, and if and this is a 50-50 partner, this is James Baker and foreign, then this is going to be 100,000, not a million, because I'm only a subject to half of it. I'm a 50-50 partner, and you complete the rest of the form like this. So I'm not going to go over in detail on how to complete these forms because they're really crazy, and honestly, those are the only sections you should probably be completing. But if you have a partnership that's investing in offshore companies, offshore funds, assets offshore, then yes, these forms are super important. But the majority of people watching this channel, watching my videos, and following me are probably service businesses or inventory-based businesses, or like doing some kind of drop shipping, and don't really invest in all this crazy stuff offshore. Those people who are doing that have working with big firms, and they have it's a lot of work to do. I don't even want to work with you if you have a partnership investing in offshore funds. Maybe I can help you with some stuff, but I don't want to do the tax filing. So if you have questions like this, and you first of all, if you are foreign-owned multi-member LLC and you are doing your 2022 tax compliance, I hope this video is helpful. I just made a course and just filmed it. It should be out soon about how to do all of the compliance and keep your company legal in 2022. And that course is going to be out soon. It should be linked in the description maybe by the time this comes out. I don't know. If not, just subscribe and let us know, and we're happy to help. And if you want to talk to me, I'm pretty booked up, but you can schedule a call out in the future to do a calls with Jim. If you want to call with our team, let us know. But again, I just made this video to help people who are doing your own forms, and for people who didn't even know you had to file a tax return for a foreign-owned multi-member LLC, that you do have to file a tax return. You do have to share information with the IRS. And if you want to maintain your tax-free company, you got to just be on top of it a little bit. Okay? So 8 minutes, we're in here. I hope this video is helpful. Like, subscribe, and I'll see you on the next video. Thanks, and have a great evening.